So I have something, but I didn't pick it up in time, but it's in my mailbox. But I am the proud owner of 2 El Salvador newspapers. It's the ones where it says that the nation is adopting Bitcoin on it. Let's freaking go. I'm really excited about that. So whenever I go and actually pick that up, so I guess for Sunday stream, I'll show you guys. You'll enjoy that. That's pretty cool. You gonna frame them? Yeah, I am actually. Forbes crypto. How cool is this? Free advice here, right? Just friendly advice. If you like collectible stuff at all, you are gonna want to have one of these for your collection. Gonna want to have it. Do you mine crypto? No, I don't. I do not mine. I don't mine and I don't farm. I rather would buy the assets themselves if I think they're gonna run up, rather than have to maintenance stuff and balance electricity and stuff like that. So where do you buy? That's the question. I know Barnes and Noble, if you have a Barnes and Noble near you, I know they have it. But this is a new magazine coming out. So Fortune is a very popular magazine. They have a subscription-based magazine, but you saw the title, Crypto versus Wall Street. But look at some of these characters. Maybe you recognize some of them with like the Ethereum, the MetaMask Fox, little whale, Kobe's glasses. Next to a ledger, Kobe's glasses and ledger. See his glasses? Like, so this is intentional, right? It is literally these glasses. So Kobe's on the cover. So I'm gonna see if my boy Ledger will sign it and then get Kobe to sign it too. I think that'd be really cool. Sell you one for 60 bucks, says Bucky. Hey, they're on eBay for 50. Come on now. That's pretty cool. Some cool stuff. The little punks. So anyway, this is, if you're, like I was saying, if you want to buy something memorable, keep it in your collection, I highly recommend this. Yeah, that's about it. I mean, I put up a picture of some of the basketball cards. If you were here last stream, I'll link this in chat. You guys can go look at it. There's a place selling framed ones. That's cool. Vantage Urine Creator is the rabbit. Oh, I had no idea. See, because I didn't get into all the DeFi stuff like Ledger did. That's why I always defer to him. If I have a DeFi question, I'm like, hey man, help me out, because I don't know a thing about all this. 3 arrows. I just saw this, or whatever they're called. 3 arrows capital, right? Isn't that what it is? 3 rays capital, something like that. Is this meaningful down here? Fluffy's on the bed? Where's Fluffy? Where's a bed? Start with that. Oh, this like right in my face. That did not look like Fluffy pwned me. By the way, yeah, bad news on Fluffy. I don't know if you guys, I'm just keeping you guys up to speed. So Ricardo is Fluffy Pony, the maintainer, right? Not the creator, but the maintainer of the Monero network. He was arrested. There was some kind of a BS deal. Yeah, so there was a real BS deal going on. He was on a flight from A to B, and that flight suddenly had to make a landing, like to refuel, and it landed in a extradition happy country, and he got pulled off the plane and arrested. At least that's the story that I heard. Okay, so Is Turbo donated, gave me hooked up a sub, said he wants the bear case first, right? Because like I said, we're gonna go over the bear and the bull case. Lots of both. There's more bulls than there is a bear case, right? But we still need to go over the bear case. As good traders, we always need to see who's on the other side of our trade. If I'm slamming a margin long, that means someone is shorting on the other side, right? There's always someone on the other side. Maybe they're the right, they're the one in the right side of the trade and not me. So with that in mind, like, we just always need to double check, why is somebody ready to short when I'm ready to long, that kind of stuff. So things are very bullish. They look very exciting right now. Lots of breakouts, that kind of stuff. But let's just really take it in and see kind of what's going on. So we're going to start with the bear case as requested. All right. So I think the biggest bear case that I can give you, like the most important data point from the bear side, take you back to 2018. right? We're not gonna harp on this. We're not gonna stay on it or whatever, but we're just gonna talk about it and then move on. All right, so we had our Wykoff distribution top. This was one schematic of distribution followed by a breakdown. Okay, so from the breakdown, we have this nice bounce at the 61. In fact, you can pull this from the start of that break. You get a really clean 61. I mean, people mess with that all the time. It's very arguable, like how you look at that. But big breakdown, 61% retrace. Okay, let's say that was muddy. Let's say there's too much fiddling with that. Forget it. Forget it. Like not a data point I want to even consider. Okay, let's skip forward a little bit. Let's do this one. All right. So from the highs to the lows, 61% retrace. Okay, so let's keep it going. From the high to the low, the high to the low, 61. Okay, so why am I showing you this? Because we have several examples of a big drop with a 61% retrace, and this actually goes kind of on and on. Like you can shrink this down from the drop to the lows, 61, over and over and over, right? We got it 3 or 4 times before it finally gave way. Okay, so if we bring that to current day, so this is why it's very dangerous for the bulls for price to be stalling out right here. What tool is that? The white and orange. Okay, so this is the Fib Retracement Tool, and you can just double click on it. So Fib Retracement looks like this. You can click like what things you want on and change their colors and this and that. So we'll use throughout the stream, we use a number of things. For example, one of my favorite things to do is for like extension targets. So we'll do the 1618, the 2618, and the 3618, right? From the high to the low, and then the extensions. And you see how price kisses off the 1618, breaks through the 2, kisses off the 36, finds support on the 26. So if you're not familiar with Fibonacci, Fib retracement tools, they're a lot of fun. There's some witchcraft involved, so you know, take it with a grain of salt, but it's just one thing to look at. So the strongest bear case, and this is not a great one, right? But it is worth noting, is that the last post Wykoff distribution area, right, which arguably we're in right now, there was multiple 0.618 retracements all the way down. So this is my like bear scenario, and price seems to be stalling out right here. Now, it did have a really nice breakout. The question is, will it continue? Will it stall and fall? You know, so it's up to the bulls. Bulls got to pull it through right here. If they could, we're good. The next stop, in my opinion, okay, kiss a little. Anything around here within 5% is kind of a nothing burger. But if it can really get trending, get off some big EMAs, keep things moving, next stop is up, you know, at this the point where the drop started. So 58,000 would be our next target if the bulls can keep this thing trucking. Okay, so the 618 is my, like I was saying, the biggest, like the most bearish thing going on. Low time frame, there's actually a couple bearish things I want to point out. So let's look at this entire range with a Pigment's funding and premium indicator. Okay, so here recently, so let's say we're gonna get to this in a minute, but last time, the prior time when the bulls started margin longing it was here. The time before that was here. The time before that was here, and the time before that was here. You know, and it just keeps on going. So we have a number of data points suggesting, hey, when people start slamming the margin long, like you should at least pump the brakes or just kind of wait a minute. So for example, you see this, how price was trending down, and look at the shorts. You see how the shorts absolutely exploded? So what we're looking at, if you're not familiar with this, we're basically seeing which way retail is leaning. Are they leaning to the left? Are they leaning to the right? Is Mike Tyson going to come in and throw that big nasty hook? Or is he going to like headbutt the guy straight in the face? What is about to happen most likely? So if we can see that retail is leaning short, and I mean heavily, then that's perfect for this little breakout continuation impulse for this entire thing. But as we see things going along, every time the bulls get real cocky and confident, especially here in the last 1, 2, 3 elements, that was the local top. So with that in mind, look what we have right here. So we have about 4 hours of margin longs piling it on. So just be careful. Just be careful. This, again, we'll get into all the bullish things. There's some very blatant, obvious bullish things right in front of our face, but we're just trying to go through the bearish things. So that's number 2. Number 3 is all this NFT hype. Look, whenever something goes from $100 to $100,000 in a couple weeks, it's probably not sustainable. I don't know. Maybe that's just me. Maybe I'm a boomer. Do you see Wykoff distribution on the 1 hour? I have not thought to even look for that. So let's see if we can build a case for that. Wow. Okay. So what I did is I brought this trade range up to these lows. It's not super clean because actually that is what the trade range would look like. Look like that. I wonder, hold on, let's check this out. I know we're in the bearish segment, but I just want to see. That looks a little more realistic, if I'm being honest. Yeah, so this is what's known as Wykoff Reaccumulation. So you have a trade range formed and lots of tests to the downside with these kind of like rounded bottom type, which really is signals continuation, but then the market keeps breaking above it. Like, no, this is not the time. No, this is not the time. And then eventually the market moves on and leaves the trade range. So that's what I'm wondering in the back of my head is here. But we have conflicting data here, right? Because what you typically would not see is a bunch of longs being opened like this. So maybe these guys get flushed out, right? Imagine a scenario where there's like another run of the lows and then it sends it. I could see something like that. Get everyone real bearish again. Lots of, now this time around, like the shorts are piling on and then full send. I could see that, but this is a nice little breakout. Trade range highs were clearly identified. Right? That price even kind of hesitated there. And now we have the breakout. So this is a 50-50. We'll call this a 50-50. We'll call this a 50-50. I don't know, looks bullish. Yeah, like, but you want it to continue. If price just kind of sits and rolls over right here, that would not be bullish, right? That would actually harm the entire setup. Because the deal, like what you want to be, like ideally, you want to be right at this LPS, the last point of supply and the sign of strength, which is this kind of consolidation above where the price had rallied to the downside a couple times. So price broke down. I mean, you can call it that because it's in line with here. And now we're above it, which is great. But if these guys close out, is that enough to keep us above it, or are we going to make a run of the lows? So I don't know. Interesting stuff. Okay, any other bearish things that I'm forgetting? I'm actually putting the glass nodes wallets in the bearish camp too. We'll go over that later. But anything else? If it hits 50K, are you back in? Well, ideally, well before that. I mean, chat, didn't you know? Guys, I'm Crypto Jack, okay? Listen. What was the low? Hold on, we need to look up in here. We need to look at what the low was. Chat, did I tell you that I 100% all in on margin at 43,935.54 cents? Chat, please. Please, I'm a streamer. God. How dare you? How dare you, sir? How dare you? You were short though. Yeah, chat, I entered at that price, but I was short. All right, yeah. Hey, pro tip though. Pro tip. So if you go and make an entry on Coinbase, the fee structure is such, like a lot of my North American audience people do. A lot of my North American users use Coinbase. Well, Jack Mallers has Strike that is feeless. There are 0 fees Coinbase is like 2 to 3%. Feeless, no fees. So I'm shilling Jack's service. You gotta set up, request, you know, you gotta do the KYC, whatever. But there are 0 fees. So let's say you're 2 to 3% behind a move. Just buy with strike and you're good. It's like you just caught up. Now, I am the type where I lay it all out in front of you, and it's up to you to go through and pick the things you like. If you're a bull, I'm giving you ammunition for your bullish case. If you're a bear, I'm giving you ammunition for your bear case. I don't care. I'm just kind of hitting it from top to bottom because this stuff is interesting to me and I enjoy it. A lot of questions on strike. Spawn hashtag ad. No, I don't know. There's a lot of questions I don't know. I'm just getting set up with them. I haven't even used them. Yet. So if you guys have used it, you can tell me. I'm just here for you to confirm my bias, dude. That's why we got viewers. I'm the bias confirmation guy. All right, let's get to the bullish stuff. Well, we already hit one big one. The fact that this is the setup, in my opinion. I think this is like one of the best things you can look at as far as reaccumulation goes. How this is breaking to the upside. There have been times where this kind of memes to the downside. I get it, but just the fact that this has broken to the upside is a big deal. Like, don't sleep on that. It's a big deal. Now, this would be interesting. Check this out, chat. Look what happened right here. Hold on, I'm backing up just a little bit. Big breakout, complete retrace, right? And on the retrace is where all these shorts opened up. Imagine if we got something like that. A visit from one end to the other, massive shorts pile on. That would be like a really, really sick long entry. That would make you have a lot of confidence for an actual impulse move versus just kind of like a margin run, like a stop run, which is kind of what I'm suspicious of this being. Like, okay, we stopped out all the shorts, ha ha ha, and then okay, we stopped out all the longs, ha ha ha. Like, that's the immediate future is what I'm worried about. But big picture, this does look pretty good. Let's back it on up though, because from big picture, you guys remember several streams ago we talked about this. This is ugly, right? Look how many wicks I'm cutting off. Super ugly. I get it. I know it's not perfect. Just bear with me. At least the upper end is pretty, right? With all this kissing off. At least this is pretty. This is ugly. I get it. I know. If you really want this as like one of your confirmation bias, turn it to a line chart. And there you go. It cuts out all the wicks. And now you're like, my bias is confirmed. This is what I wanted. But if not, go back to candles. Okay, so just imagine this is legitimate. Well, did you know that there is something called a broadening bottom? And this is exactly what it looks like. With 1, 2, 3, 4, 5, 6 touches, a drop and a breakout. Let's go see how that looks. With our 1, 2, 3, 4, 5, 6 drop breakout. I mean, I don't really know what more you could ask for. That was pretty clean. Back still bearish, LOL. I mean, am I exuding bearishness? Remember, the only thing I said right now is on low time frames, a lot of longs opened up, and the last time we saw that, they got kind of debated out. So I would love to see a pullback, big shorts, and then full send. Like, so the macro patterns are still there. The micro patterns, like where you pick your entries and that kind of stuff, that's the only thing I'm kind of skeptical of right now. That's it. Probably next up is my favorite, the hash ribbons. Man, I can't stop. I've had a lot of people try to talk me into being bullish, like early on. And I'm pretty stubborn, especially post Wykoff. Post Wykoff, we've never seen something where it's just like one drop and we're done. So I have a really hard time with that. Like, I struggle with that. But if somebody pulls up a hash ribbons chart and they're like, yo, homie, check it out. Yo, take a look. Every time this blue buy, see these blue buys? Every time, let's just kind of mark them. This thing only fires once every year, once, twice a year, whatever. It is bang freaking on. So when somebody messaged me, was like, hey, take a look in chat. They're like, hey, take a look at the hash ribbons it just triggered. I'm like, all right, yeah, let's take a look. I don't know. These are the only times it's ever triggered in history, right? Do those look like good times to buy to you? Like if you're a buyer at any of these positions, you win. You win the game. You've beaten Bitcoin. GG. You're in the bonus round. Now you're just like on the yacht having fun. NFA. So I have a really hard time just sleeping on that. So when it just triggered, now here, I'm not trying to like belittle it, and I'm not trying to say I don't agree with it, but I will point out, if we go back through, each of these things fired at the bottoms, like at the relative bottoms, right? So we're talking about within like a candle or two of the bottom, or maybe the first candle at the start of an uptrend. This one was actually like right there. I just broad picture. I didn't get it. So down this fired 3 times down here in the Wykoff accumulation range. Still pretty good. High time frame still pretty good. This is down in the lows. This is down in these lows. This is during consolidation. This is during the first uptrend. This is like the first week above, like in price discovery. I didn't have it perfectly on. It was actually the very first week right there, if I'm remembering correctly. So we're above. We're sending it. Okay. This has been like the first time that I could find where it's after a 55% move. It triggered like at the end of that week. So maybe that's just because of the impulses. That's just what we're going to see from now on. So this was 3 weeks of sideways and then it triggered. Right, you see what I'm saying? So that was weird to me. I feel like, just to be fair, I need to like point that stuff out. Like if we put it on the daily. So you would expect it when it's like bang on, it would actually be calling it like kind of down in here before the actual moves or after some consolidation. But here this was absolutely after, like up only for 60%. So I don't know, weird. It's just a kind of a weird deal, but it is what it is. That goes firmly and squarely into the bullish call. Very, very, very bullish thing. 100% hit rate. NFA. But historically, when back tested. Any thoughts on it messing with the miners being banned from China? Yeah, that's the argument against it this time around. So the way hash ribbons works is the whole concept is like there's a level where the miners cannot efficiently mine Bitcoin, and they are like forced out of the market. And as they're forced out, they sell. So, you know, blah, blah, blah. So what this is saying is like, oh, that started right here. And then it ended 60% higher here. See how this part right here is like the start of capitulation. So that is very strange. What I really think is happening is it's regulation related. Now, good luck telling $1 billion hedge fund like, no, this isn't real because it had to do with China regulation. I think this has a high enough hit rate. It doesn't matter at this point, but it is a very fair point that historically it had to do with the efficiencies of mining and like how much money you make per day and like FOMO selling, like just a straight red button, sell all, smash, and getting out of the market. That's what we saw, like especially during this. Like in here, the last quote, like full on bear market. I mean, take a look at this. When it triggered was right before the cataclysmic drop. And then it told you to buy at 3,600. That makes, like, mentally, that makes sense. That's the model was built to capture this kind of stuff. But then here recently, it told you to get out at 36,000 and it told you to get back in at like 46,000. So I don't know. Kind of a weird deal. So we'll see. Regardless, no matter how it shakes out, in going into the future and looking back on this with this, it's going to be very interesting. All you can do is like add new data points and say, hey, maybe you didn't trade this right. Maybe you entered a big short right here because this was like the start of capitulation. And then you had to close your short at a big loss, you know, up in here. And that's just how it is. Sometimes you just got to eat that L and move on. This is why TA doesn't work 100% of the time. You were 100% right, dude. Sometimes the market is going to do the next thing. Sometimes there's going to be a new thing. 100%. And you just got to deal with it. You just got to suck it up. Hopefully you made enough when it told you to do different things. Especially post distribution. Like if you shorted here and then closed your short and went long here. And then shorted there and then open fresh longs there. You know, like on a broad enough picture, it does great, but it's not going to bang, you know, hit everyone 100%. It's just not. Our runner asked about Incelico. Pull them up real quick. Blood signals. That's how I have it listed. All right, so let's look. We're going to zoom this thing out to the daily. That's pretty clean. That's pretty clean. So what you have here on the daily is two bottoms, a bottom, right? So there's all these different indicators, like the Fisher transform and all kinds of stuff. Basically, they're momentum indicators that look at multiple different things and also money coming in and out. So this is Incelico's trading suite. I guess I need to say this. This is not hashtag ad. I don't use this, but Flood stopped by and hooked me up and basically just gave it to me for free because I stream, and he's like, hey, if you want to use this, go for it. Twitter flood. Flooding? No. Whatever. So I'll link him. But anyway, he runs this Incelico research, and this is their trading suite. This is how it'd be, how it'd look. Yeah, they're very, very, very good. Let's look on lower time frames. I'm curious like what it's saying right here. So the 1 hour, I mean, look at this. Hey, where do you enter a fresh long? Do you enter when the momentum indicators are like up in the stratosphere or when they're low? I can't remember. Chat, help me. Help me, help me. What do we do? Interesting stuff. All right, let's look at the 4 hour. Everything's past the midline, you know, closing in on the highs, past the midline. Looks like there's room to go. Maybe a double tap of 48.1. Push these things up. And the stuff I look at, I'm watching these guys. If these guys close out, I think we got room to run. Like, keep sending it. But as long as they're piled on, I just don't think it goes anywhere. Just my 2 cents. Interesting stuff. All right, any other questions on the flood, the Incelico stuff before I move it? Buy support, Jack. Yeah, exactly, dude. Sly Cry. Oh, yeah. Buy high, sell low. Easy. Exactly. You FOMO in during the pumps, and you panic sell at the lows. Easy way to trade. Sell the dips, buy the rips. You guys have traded. You guys are like pro traders. I can tell you've been around a little while. The Incelico stuff is really good for like low time frame trades. So let's kind of click through it. So 15 minute, let's see what it's saying. Nothing really great. I'm looking for multiple metrics to line up. That's hilarious to me. Oh yeah, we're gonna break above the highs of the oscillator and literally just print sideways since 45. The last time this happened, it full sent it back to the lows. Interesting. Well, that lines up with what I'm wondering if that would happen. So I'm looking at each time this little oscillator gets broken to the upside and how it just looks like it's unsustainable, or at least it was before. Maybe enough supply's been absorbed that it can do that. Like now's the time for the up move or whatever. Here's the 1 hour. That 1 hour is hilarious. Up only. This thing's gonna start shrinking as this just grows. So people are asking me like what my strategy is, what I'm looking for, like me personally, because I am largely sidelined. I'm not 100% sidelined, but I am largely sidelined. And how about this? This is something you guys care about. Near the end of the stream, I'll get into that. But I don't want to influence anybody. That's why I just want to go over what is bullish, what is bearish, and that's got to fit your case. Like whatever you view it, like your situation is probably different than mine, right? Like it's easy for me to sit sidelined. I recognize that because like my average exit is like 59,000. You know, my spot is effectively out at like 58 to 59. So kind of seeing it dance around here doesn't really bother me. Like it's okay. At most, I'm just missing on potentially more gains, but I've like secured a bag. You know what I mean? Here's another really nice bullish indicator for you guys. You'll love this one. How about a golden cross? Golden cross, boys. Now the golden cross did print literally at the highs at 48, whatever. So let's call it 48. So price needs to get above that. Like, you really, really want price to continue, or at least consolidate and then, you know, break out, whatever. But the worst thing in the world that can happen right now is, imagine you didn't have this daily EMA on, right? See, imagine you didn't know that that had happened. You're not watching it, whatever. Let me give you a worst case scenario. Worst case scenario is there's some kind of pullback, right? And kind of like just a little meme sideways, not the end of the world, just like a little drop to the side. A lot of the bulls are still bullish. It still it checks a lot of boxes. Hey, this is just bullish consolidation, blah, blah, blah. But if you throw this on and suddenly you realize that what you've actually done is had a second bear cross, to go from bear, bull, and back to bear is like you may as well get in the coffin, like write your own gravestone. GG. That's one of the worst things you could see happen. Now a little kiss wouldn't be the end of the world. Something like this, price breaks up, sure, great. But I'm just telling you, all I'm trying to say is, if you see the daily cross again, even if it's during sideways, even if it's during some kind of quote bullish consolidation, whatever, take that serious. Close your margin positions till you know what's actually happening. Like, something like that would be catastrophic. And the reason I'm saying that, the reason I'm even like focused on that, is because that's what happened last bear market, unfortunately. So, and I'm just planting the seed of things to watch for. Whenever you wake up, you got your coffee and you're flipping through your charts, check that daily 50 and 200. Just see where it is. Just take a look at it. So, because back here in 2018, we had a death cross, followed by a golden cross, followed by another death cross. It was bad. Now, price action is a little bit different, and I'll give you that all day. I will not argue with you about that. When we got our golden cross, price went straight down since then. And here our chart looks more something like this, right? Like it's kind of viewed out. There was a threat. That threat was there, but now it's almost equal to the prior high. So it is different, but it's just something to think about, and I will keep moving. Josh's indicator. Did you know that Carpe Noctem has a type of Ichimoku cloud that he is custom built? It's basically just doubled settings, if you're curious. Here are the settings. Good life, you nailed it, dude. So I'm gonna read what he said because I think it's useful. He said, look, I'm bullish, don't get me wrong. I'm just concerned that everyone else is bullish now. And when everyone appears that way, the whales often take that as a liquidity grab and just go the other way. That's what I'm trying to convey. Is that, like, from a macro sense, there's all these check boxes for, yeah, bull. But that doesn't mean we go to 100 grand like tonight. Like, maybe they kick it down the road 2 weeks, 4 weeks. You know, maybe they run it back to the lows. You don't know. But yeah, like, and I'm not calling for that. It's not some big jack call or something. I'm just saying you should likely mentally prepare for that scenario. And then if like we were saying, oh, and suddenly there's a second death cross. I need to get out of the way because maybe the whales are going to take this down to the lows again. Something like that. Let me give you a little rundown on Josh's cloud. Okay, I'm going to turn price off because it's actually irrelevant for how this works. Josh's system told you to go long back when price was around $200 and stay in your longs all through 2017. Okay, now that I say that because it told you to close and reopen, close and reopen, close and reopen. So that's the way he trades it. He talked about this when he came on stream. Like, you would actually close it, reopen it again, close it, reopen it again, 3x leverage, whatever. But the reason you always do that, you do that little dance of closing it, even though it's annoying, is because one of these days it's going to tell you to close and it's not going to tell you to reopen again until the bear market lows. Let's go. So Josh literally closed out like an 18K long and reopened at like 4K, 3,500, 4K. So this indicator is baller. It's the real deal. And then bring it to 2020. It also told you to go long back around 9,000. Close your long, reopen it at 10. So like open, close, And then eventually didn't cross all through here. Finally, it crossed about 5,600 or 56,000. God, these numbers are getting crazy. 56,000 was when it told you to close. And it told you to reopen right around 36,000. Now, here's the yeah, but. There is a yeah, but for Josh's stuff, as there always is. Just something, again, something if you're bullish or bearish, you take what I'm saying, you take your favorite parts of what I'm saying, and you stick that in your duffel bag of bias, and you just take it with you. So what you really want is a cross above the cloud. You want to be above the cloud. Now the cloud hasn't even started to twist yet. You see that? Price is going to have to get up here and likely spend some time before there's a number one, a twist, and number two, another like cross of some sort. So let's say this does head up. The way Josh's system is designed, what you'll probably end up getting in like the most bullish scenario is a break to the upside enough to pull these moving averages up, and also enough to flip the cloud to where now you have so the cloud flip is very important in the Ichimoku system. So you have to get price up like right here. You gotta get price up enough, big explosive move, enough to flip the cloud from a big, fat, ugly red to a nice green that acts as support, and price bounces along support all the way up. So that's what we want. We need the cloud flip to feel really good. See how price just kind of drifts sideways till we have a nice cloud flip, and then boom, off they go. I'd love to see something like that. But what's interesting here is that the price has not gone high enough to even flip. So let's say price drifts sideways. Let's say we're at like 47.2 for the next week or 2 weeks. Well, on the daily, this will just keep going flat. Like it won't flip. We have to get above this and actually like consolidate above it to get this to flip. Just like in here. Like you gotta drift sideways. Gotta show, the market has to show like, look, this is like where we're loading up. We're loading up for that 100K moonshot. We're doing it right here. Cloud flips and acts as support for the entire run. So you can go back all through time, even back in the 2015 market, this consolidation right here, this like 400 to 300 consolidation. Now we know it through the lens of Wykoff, right? This was our, our spring, our SOS. So we know what we're looking for, but this system, it has the same purpose. The sign of strength, it's not just a fun meme to let people get in. It's a way to build confidence in a much broader move, like a multi-week, multi-month sustained move. And that is what flips your cloud to green. So all that to say, you never need to feel like you have to FOMO. Like if you're looking for the best dollar entry, then okay, I get how you'd want to FOMO like literally any little move. I get it. But if you're looking for a big macro confidence move, right, where you get the twist and then actually know that there's this confidence of now we have a big green cloud moving to the upside, then we don't have that yet. So according to Josh's system. So I'm just trying to lay all the the pros and cons of the system. So the system did say to go long, but it is not signaling for like a big massive move to the upside. So it could get there. It's not out of the question. It just needs some consolidation first. It needs to be higher. So the other thing is the way it's consolidating, it's only pushing even these moving averages straight sideways. Price does need to continue to move higher to move these moving averages up. So as long as these things go sideways, they do what the play is what's called a C clamp. Basically these things act like magnets. So this little blue line, I think is the best one because we like last stream we went through and we did a deep dive on this, but so for now, just take my word for it. But basically, whenever you have a bullish break to the upside, like this is a really good example, big break to the upside, and then it came back and kissed off this fast moving average. So you end up seeing that a whole lot, both on the bullish side and the bearish side. So even the COVID dip to the downside, as price came up, it broke above the cloud, came back to this fast moving average and then sent it. So we've not had any moving averages touched. And until that happens, they're just going to drift sideways and basically act as a magnet to pull price down. So you want price to continue. If you're bullish, you do want price to continue to the upside, maybe consolidate a hair longer and then full send. And it'll end up pulling these things up with it and flip the cloud. Malifestro nailed it. These are just 2x settings basically. And he has a really good YouTube video, Josh Carpet knocked him, where he talks about why he chooses to set it up this way. Basically it's because this market trades 24/7. This was his explanation anyway. You know what he had earlier today? Of course, I was at the hospital with my loved one. Wasn't even like conscious of the market while this was going on. So a daily, this is close enough. It didn't actually touch. It didn't touch like last time, but the 20-day moving average has been really, really important as of late. If you bought it in here, you did really well. You got this entire impulse. If you bought once it broke to the upside, right? You see how there was this like forced move to the downside. If you bought that candle, you did really good with that impulse. That impulse. Now there's, who knows, maybe there'll be a third impulse like this. We are above the 20-day. But you can see the slope. It's starting to kind of taper out. That's the big question. Is this enough to make like a little cheese ball new high? Maybe kiss off 50 before some kind of pullback? Is it going to full send? I mean, hell, I don't know. I have no idea. So it's up to you. If you're a big believer in buying on the 20, it's really not the end of the world if you buy right now. I mean, you're only about 7-8% behind. If Bitcoin's going to full send and go to 200K or whatever the price targets are today, then you shouldn't care if you're 8% behind on a move or not. Right? Like this move from here to the highs was 30%, 29%. So you would only get 21% low to high. What year will one Bitcoin be a trillion? I don't know, man. 20 years? 20 years is probably fair. What else? You going through glass nodes? No, I'm not. You guys want to do glass nodes now? Hyper USD? I think it's coming. I think it's coming. The question is it like tomorrow, like a lot of crypto folks think, or is it like in the future? I don't know. Because you know what else is going up right now? The Dixie! Full send, baby. Full send. We have not had an environment. All right, so let's line this up because I want to make a point here. Let's start from 2015 just so we can like visually see this. All right. So while the Dixie, which is the strength of the US dollar, while the Dixie was memeing around, Bitcoin was coming out of its accumulation range back in 2015 into 2016. Right at the peak of the Dixie as it trended down, this correlated with $1,000 Bitcoin. And as this slid to the downside, the bottom itself, yeah, you get the idea. Okay, so the bottom itself, this correlated with the high of the 2017 bull run. So this is when Bitcoin hit 20K, right? So the Dixie bottoms, literally the bottom of the Dixie. So the dollar is worth the least it's ever been. Okay, bear market. So people are, as the trend is moving up, people are rotating their dollars out of Bitcoin. This is one way to look at it, one way to interpret the data. As the dollar is going up in strength, Bitcoin's going down and kind of going through its bear market. Now, as the dollar's trending down again, let's kind of zoom in. Literally the top for the Dixie is the bottom for Bitcoin back in 2020. And through this entire downtrend, Bitcoin has done nothing but go up. And now it's starting to drop, or at least it's had a few weeks of down as the Dixie is rotated up. So the outlier here, the thing that doesn't necessarily line up, is this breakout as Bitcoin's going up. So the Dixie is trending to the upside as Bitcoin's going up. This is unprecedented. Unprecedented. So either this correlation is no longer valid, which is perfectly possible, right? I'm not going to say that like, no, it has to be this way. Or there's going to be a real strong correction for Bitcoin. It's just got to be one or the other. There's no in between. So yeah, that would mean Dixie and the moon phases are invalidated. Yeah. It would be. If you guys want to see the moon phase stuff, which this is like, I need, you know what I need is like a broom and like a cat, like a witch's broom and a cat and a tall pointy black hat. I need to get something like that. And then that way I can put this on and actually die inside. Okay, this. If you guys are new to the stream, hi, welcome. We look at moon phases sometimes. It's laughable. Yes, have a good laugh. Tell your friend about it. Okay, and then wipe the tears from your eyes and actually like focus for just a second. And look at how halfway accurate this crazy thing is. So you're supposed to sell on a full moon and buy on a new. Sell on a full, buy on a new, sell on a full, buy on a new, sell on a full, buy on a new, sell on a full, buy on the new, sell on the full, buy on the new, sell on the full, buy on the new, sell at the full. That is hilarious. It's about as accurate as Ichimoku. Yeah, right? Or the hash ribbons. I'm going to tell the hash ribbon guy. Now, by the way, the guy who created hash ribbons, he actually does follow me and we've been DMing. I'm going to try to get him on the show. I'm going to try to get him on. We'll interview him. We'll have a good talk with him, that kind of stuff. New moon is a dark moon. Yeah, that's what I said. You buy on the new. You sell on the full, you buy on the new. Oh, new moon is the top? But that's the darker one. I don't know. I don't care. I don't actually care. New moon is the top. You're right. Put the labels on for idiots like me. Okay, I lied, but you get the idea. So you buy on the, you sell on the full, you sell on the new, sorry, you sell on a new moon, you buy on a full. Whatever, who cares? You get the idea. Doesn't matter, whatever. Whatever, I don't even care. So we have two things that are being broken or like teed up to be broken right now. Number one is the Dixie, the correlation with the Dixie. And number two is the moon phases. Number three, the third correlation that might be breaking. Glass nose, let's take a look. So I paused the music for 1 second to say, we need to thank our overlords. Number one is TradingView. Big shout out to TradingView. My premium subscription ran out because that they donated to me for like 3 months. And I just shot them a DM on Twitter and they're like, yeah, we got you, fam. And they set me back up literally same day. So big shout out to TradingView. If you don't use TradingView, use them. This is basically hashtag ad because they allow us to look at all the features that TradingView has to offer. Because I stream, I basically advertise for them. They get the relationship. They hook me up. They didn't have to do that. They did. So big shout out. No, I like the old logo. No, I'm keeping I don't want the new logo. No, this is TradingView forever. I'll die on my deathbed and be like, the old logo is better. And that's just how it is. Number two is Glassnodes. Big shout out to Glassnodes. They've donated or gifted or whatever, adorned me with the tier 2 level of their data. There is 3 tiers. I'm going to try to get a 3rd tier. I think if we build like a bigger audience long term, or maybe if I can, I don't know what their threshold is. They haven't really spelled it out, but there's got to be a level where they're like, okay, now you're worth us donating the tier 3 stuff for. Whale wallets with 1,000 Bitcoin in them. There was an argument to be made that these guys are who made bull runs go. So if we go back to 2017 into 2018, this is the best way to view it. 1,000 Bitcoin wallets popped up. As price is drifting to the upside, they start falling at the top. So these guys are selling at the top. This fits our distribution model. This fits what we would expect to see. Okay, they start going hard as hell, buying as much as they possibly can. Look at that. If I go back and incorporate that data, they have done nothing but buy. Wallets with 1,000 Bitcoin in them has done nothing but increase since $6,000 Bitcoin. Like process that. These guys have been waiting for this opportunity for so long, and then they sold the top recently. So these guys full exited during 60K. We returned to the same number of wallets that were around at $7,000. That's the level we're at. And if we zoom in here, there's been zero correlation between new whale wallets and this price going up. Imagine whales missing the bottom. Yeah, this is what I'm saying. So either there's like something crazy going on, right? Because again, this marks our third metric to be broken. So either there's something that we don't understand and it's going to be reverted or whatever, or this just is not actionable anymore. Maybe that, I mean, the decision tree says to explain this result, time to apologize to Willy Woo. No, Willy Woo interpreted the data incorrectly. People can reach a conclusion through like a false mental gymnastics path and get lucky, essentially. Like, because you're effectively saying up or down. But no, I will never say that Willy read the data right and we read it wrong. Never. Because it's not true. So either the data is not accurate, the wallets have not increased, these whales are not buying in. Let's look at the 10K wallets. 10K wallets sold off. 20 to 25% of these wallets have been dropped, and they have not added back. They have not added back. I don't think there's 24 or 50 whales. No, but it's a trend. It's just like, there's a pattern that has occurred every cycle top and through every cycle bottom. That trend is breaking literally as we speak. So that's what I'm saying. Either this data, like, you can take all this and put it all together and throw it in the trash can because it's useless, or there's more than meets the eye. All right, 100 Bitcoin wallets. Yet again, so we have the 10,000 wallets, the 1,000 wallets, and the 100s, and they've all sold off and have not. So the trend is what's important. It's not the number itself. Forget the number. But that's why I'm trying to show you the overarching trend. Trend is up for even the 100 wallets when price is heading up, or when a bull market is starting, or whatever you want to say. And trending down does not start it back up. What's Woo's take on the data? You said that so weird with all your periods. Willy Woo has said that the whales are accumulating, but he goes through this and he'll pick like specific things. And he'll say like, well, this one piece of information by itself and isolated says that we should be bullish. But if you like take it as a whole with everything else, it's not as strong a case. You can be like, well, okay, maybe. I'm not saying you're wrong, but can't like present it as though it's this ironclad biblical truth kind of case. It's not. And then here's 10 Bitcoin wallets. He also said retail makes bull markets. He 100% did. And I called him out so fast on that. Yeah, by the way, chat, retail does not make bull markets. Retail will participate in bull markets, but retail is who buys the top. Make no mistake. You remember the news talking about buying $3 Ripple, $3.50 Ripple, or $4 Ripple, whatever it was? That wasn't at the bottom of Ripple. That was literally the tippy top. And that's not a coincidence. That's not by accident. That is how markets work. 1 Bitcoin wallets have climbed pretty good. Not like statistically significant, where it's only like 1% or so change, but worth pointing out. 0.1 wallets, and then last. So retail wallets are doing nothing but go up. Retail's loving it. They're making money. They're quitting their jobs. They're all in. They're loving it. So the 0.01 Bitcoin, 0.1 Bitcoin, and the 1 Bitcoins are just to the moon. Big boys are sidelines. They're like, nah, fam. In fact, some of them are selling off while price is high. It's a funny mix. It's a funny mix. Yeah, they're all getting girlfriends, exactly. Who here knows what the Willy bot is? Does anybody know about the Willy bot? Yeah, hey, you're talking 8 hertz, dude. I'm just getting in there. Hold on, just bear with me for a minute. Does anybody know what the Willy bot is? Nope, nobody knows the Willy bot. This is Bitcoin history. Look, I paused the music for this, so you know it's good. Okay, Mount Gox. There you go, Shelter Freedom, 100%. Okay, so there was a period of time where the dominant exchange in the entire ecosystem, the entire Bitcoin world, was one exchange. It was something like 80% of all trade took place on that exchange. And there was a period of time, at the BLX here, the daily, there's a period of time when it was just in up only. Mount Gox Willy bot. I think there's a good, it was this pump right here. So it really came to light for that. And we're hearing a lot of people talking about, well, maybe Bitcoin has this, you know, a double market, like a double, like a moon pullback moon, right? There's a lot of that kind of talk, and it's pretty apt, because what happened was, you see this right here. We're going to talk about this right here. What happened was that exchange, whenever you use an exchange, you pay the exchange a little fee, right? So to buy or sell, you pay a little fee. So what happens? Mt. Gox X COO here. Yeah, built by Mark. Dude, come on. Come on. What? You're lying. You gotta proof me, dog. Come on. Are you actually in the chat right now? I want to believe, but I'm skeptical as hell. All right. This is like, you know, the whole don't trust but verify. And I'm not gonna. Damn, dude. Okay. Are you involved with Mark on this proof or ban? Proof or ban? Are you involved in the all the court cases and stuff that Mark's going through? Do you have like a Twitter account or something? Yeah, if you could just show your ID. All right, so let's carry on. Okay, so while Omgard, which by the way, if this is legit, like, you're blowing my mind right now, because I'm literally, picture me on a beach reading books about Mt. Gox and all the stuff with what's the Roger Ver, and then there's all the other big players. Anyway, I'll move on. Yeah, no, I'm kind of nerding out, dude. That's wild. Yeah, Social Security. So let's just move on. Let's move on. Let's keep moving. What happened was the Willy bot, turns out there was a bot, an automated bot put on Mt. Gox or run on Mt. Gox. And hell, if you've got Omgar, if you testified against him, awesome. If you want to add some input, do it. But the way I understand, the way I remember it is, like Coinbase, if I buy some Bitcoin, I pay Coinbase a little fee in fiat. Like they get $100 for my $10,000 buy or something like that, whatever. And they put that in their bank account and they move on. Well, what WillyBot was doing was, every time there was like a fee, it was buying Bitcoin with the fee. So think of the buying pressure, the buying power. It's not just the market moving price. All of a sudden, it's the exchange itself. So people are buying and selling, and there's basically 2 times as much buying activity as there is selling. So it's moving things to the upside really fast. There's lots of really good articles on this. I highly recommend you read it. But the punchline is, it was up only from $200 to $1,000. So why am I talking about this? Jack, shut up. Move on. Okay. Well, let me explain. Let's go Twitter. And Brian Armstrong, he tweeted out today, we've recently received board approval to purchase over 500 million of crypto on our balance sheet. and we'll be investing 10% of all profit going forward. Okay, this should, some alarm bells should be going off. My old employee found an account that was buying 2,000 Bitcoin on a schedule. Dude, yeah, I do. Dude, plug me in with these guys. Get me in on Telegram or something. Shoot me a DM. I'm gonna nerd out with all these guys. We'll have them on the stream. Hell, I can get y'all on like up only. I'm sure you'd want to be on that too. That's crazy. What's funny about this is Kobe tweeted out, I mean, he had the Odell Beckham Jr. stuff, but he tweeted out, Coinbase is now WillyBot 2. And that connected some dots for me. Okay, so let me bring it home. Chat. Price has been doing this. No on-chain metrics are showing whales buying. The TA is breaking. There's no pullbacks to speak of. We've had like 2 8% pullbacks max. Anyway, and so we're not seeing wallets increase. Price is going up. We're not getting any pullback. What could be happening? The only thing that would make sense is if the buying activity is happening on the exchanges themselves, out of the public's eyes. I'm talking about this. So if this is the real deal, like next leg up, whatever, the only explanation for why we're not seeing it in the metrics, it's not because retail's pushing it up. Get that out of here. Retail does not have the pockets, the diamond hands, as much as they want to meme about it, they don't. To take price from 30 to 45 to the 100 grand. Then they can't do it. If that takes real money, king money, Saudi money, that kind of money. And the only reason we're potentially, one of the reasons, is perhaps it's on the exchange. Perhaps it's Coinbase itself making their entries, along with some of their custodial clients, the big boys that they look out for. But on the exchange, that's what I'm trying to get across, is perhaps that answers a lot of these questions is because it's actually on the exchange. So invest in Coin. Let's take a look at what Coin is doing. It's a great question. Coin is one of the things I watch. If you're watching this trade range, you are not long Coin. You are actually out. Now, it could go on to form something better, right? Something like that. And that would be a better long signal, because maybe the argument is, oh, well, it's just going to bounce here, you know, and then kind of do something like this. But the punchline is we are back in the trade range that it broke out of. So there's an argument to be made that this is redistribution. So at minimum, I'd expect to break to the downside. That's the high percent trade, is a visit to the lows. And then visit to new lows. That's actually redistribution. To a T, that's what you would expect in redistribution. Now, Bitcoin could go up during this time, potentially, because maybe other exchanges lower their fees. If the retail fee model is at risk for Coinbase, right? We just talked about Jack Mallers and Ellen Strike and all that. Then I don't know how they make money. I don't. If an exchange with already 10,000 Bitcoin increases more Bitcoin, doesn't that mean it doesn't show on Glassnodes? Yes, that's a good point. There is a metric for how they adjust. But yeah, if they went from like 10,000 to 20,000, I wouldn't see it. Or 10,010 to 20,000, I wouldn't see it. I can't see Coinbase seeing new lows unless Bitcoin starts going down. Well, maybe that's the market's way of telegraphing some kind of move to the downside, like even a revisit to the lows or something. But the reality is Coinbase itself is down 20%. Or was. Now it's down 15%. How bad was the pullback after the WillyBot leg up? Sure you want to know? Just 86%. 86%. No big deal. No big deal. Oh, it's painful. So who knows, dude? Who knows? We're just kind of going over all kinds of stuff. Dude, I can't get over that the Mt. Gox COO was potentially in the chat. I'm gonna work on that. Wait, what? Yeah, dude. I mean, I'm working on proof. I'm working on proof, but a homie said, he was like, anyway, proof or ban, proof or ban. He asked me to keep moving and he would work on proof, so I'm gonna honor his request and work on it off stream, right? But let's keep moving. The original Mt. Gox. So the way it worked is somebody created Mt. Gox. He sold it to somebody else, to Mark Karpelis. There was a handoff. Mark ran the exchange. Somebody used some administrator credentials and siphoned like, what was it, 100,000? Like 100,000 Bitcoin. Using the administration, the admin credentials. And so anyway, there's been all kinds of stuff. Right now, when people talk about the Mt. Gox court case, it's actually in Japan because that's where the exchange was located. Like the business itself was located. So that's where the court is going on. Anyway, I love all this history stuff. I'm telling you, I read books on this. That's crazy. ADA, you guys were wanting to, y'all were like rock hard on ADA. Okay, so last stream, a couple things we talked about. Number one was real clear Wykoff accumulation at the bottom. I can't wait for a bear market. Guys, I can't say this enough. Hold on. Look, listen. The next bear market we have, I'm going to be deadly. I am giddy for when that happens because now that I've this was my getting my feet wet. I identified a handful. I didn't really trust it. I thought I played it all wrong. I went in on certain setups that I thought looked strong, but not all of them. I should have gone in on all of them. That ain't happened twice. If anything, I'm a quick study. That ain't happening twice. So I can't wait to find, like, whether it's a DeFi coin or whatever, something during the next bull market or during the next bear market will have Wykoff accumulation again. It will happen. And we're going to get it. It's going to happen. Let's take a look at what's happening. So we are at the prior high, like to the penny. The price kissed off of it. If you were long from the breakout, like a lot of people will long these breakouts, that kind of stuff. Like say you were long on margin. I gotta recommend you close out like at the prior high. I've seen time and time again, price hit the high before some kind of nasty pullback. I don't know. I don't have a crystal ball, right? But at least exit your margin on stuff like this. Give yourself, like, because if this is going to go to the moon, you'll likely get some kind of big breakup with like a retest. And then you can re-enter with confidence this time rather than just like praying. So secure the bag and then like re-enter it. But the thing I liked on this, and I talked about this last stream too, no matter what the coin is, if you see something that has like this double head and shoulders meme and it breaks to the upside, that is huge. That is absolutely huge. So it's gone up 150% or 140% since then. This is very different than some of these other alts we've seen. Like even Ethereum was like kind of drifting up and then had this. Yeah, I get it. Sure. Consolidation breakout. But do you notice how much different this is? Like EOS, ETC, Litecoin, right? Where there's these like trends that are breaking to the downside. Neo, big nice trend to the upside and break, and then so okay. This is fine and all, that's great. But this is very different from this with the break. So if you see any coin that does something like that, that's your play. That's your play right there. It will most of the time, it will have a similar reaction to the highs. And then I think the play is to double it. So the trade range, whatever the trade range low was, so $1 to 250. So it's like another $1.50. So $4, I think, is the measured move. I can't remember what this is actually called. It's like head and shoulder continuation or something. It's like it's when you're looking for when a head and shoulders breaks to the upside, like a failed head and shoulders. There's some name for it. I don't know. But I'll tell you what, I'll give you two targets for it. So pure TA measured move targets. Number one is the highs to the lows. So $1.40, which is this guy. So $1.40 is, you see how that lines up right there. So this is target number one. And then my other favorite way of doing it is the high to the low with the 1618 extension. So let's see where that is, which is about 330. So the way I would do this is I would have this as my first take profit, the 330, and then the moon bag targeting above. But you do want confirmation, because these can meme around and turn into other things, right? Like it's not like 100% thing. But if this does break out and consolidate, then these are your next targets. Baller. Any questions? You look at Sol? No. That's another one. I can't wait for Sol to have a bear market so I can build a moon bag on that. Jeez. Any of the Sam coins. That's clean. That's real clean. So I was playing with a channel before. Oh wait, is it this? We gotta keep our eye on it. I don't have a great setup here. If this is a channel, if what I just drew right here is a channel to the highs there, I don't love it. Diagonals are not great. You really want to stick with horizontals, just as a rule of thumb. So I think I'm gonna stick with this. Watch Bitcoin do this, right? Like 64K, 30, full send, 70 or whatever. So one of your measured moves is, looks like 95, which are 94. I actually really like that as a target, because it seems like final destination targets are these nice numbers where everyone's like, you know what? I'm out right here. I'm done. $100, perfect little 3 digits. I'm out. Let's do it. So that would be a clean, so from the bear market lows of $1, you're up 77x on your money right now. Jeez. Or if you bought the breakout at $2, imagine buying Sol so late as to be $2. Jeez. FTT, yeah, take a look at it. It's like it's consolidating. Now it did break down from its parabolic uptrend. Like this is nothing but parabolic uptrend, 100%. See, you can match it up perfectly there. We're looking at FTT, guys, just in case I didn't make that clear. The question is, okay, now what? Is it just consolidating for the next leg? But anytime the parabolic one breaks, anytime this parabolic uptrend breaks down, that should make you sit up in your chair and be like, okay, all right, I'm serious now. I'm gonna take profit. I'm gonna protect my position. Whatever. Is the market bearish or bullish? Yes. Yes. FTT is at a perfect $50. That's funny. Talking about perfect numbers. What was the bear market low? Once again, $2. Do you like horizontals better? Yes. Horizontals, you gotta think of it like this. Stops are typically set on a horizontal plane. There's not a lot of people, retail, whales, etc., who can have a stop move. So if you're looking for like the whales to come down and really mess with people, they're looking for that level. Like for example, see this little trend right here, this channel or whatever you want to call it. So you see this channel? Imagine you're like, hey, as long as this channel holds, I'm good. I'm good. So look, I'm gonna buy right here and I'm just gonna set a stop right below it. Well, let's see where that point would have actually been. Boom. Your stops just got ran. Like literally during the cascade, the first hour, the first day, I mean. This big cascade right here, boom. You're stopped out. GG. Thanks for playing. Haha. You were up 2x and then some. You were up 250% on spot, probably twice that on margin, and you just got wiped out, idiot. Haha. So that's the kind of stuff you got to keep in mind, that whales are always hunting for those stops, especially when they're like, hey, it's up only. Ha, everybody get in here. Let's go. We're all going to make like millions of dollars. Let's do it. And then they send it straight down. So that's kind of why my spidey sense is tingling a little bit when I see this kind of stuff. Yeah, up only, guys, is great. Yeah. Everything's fine. Everything's fine. Because look where your stops would be. They're down here. They're way down here. They're unless they're going to go like, you know, a portion of the way down or something. That's for some kind of liquidity event. But this stuff makes me nervous. But it looks, FTT is going for it. It has broken down from the parabolic uptrend. It is rounding out. If you're going to do anything, I would give yourself at least some kind of edge to wait for this to break out and then buy the breakout. Like that's what Bitcoin did. Bitcoin broke out of this little parabolic, this rounded top structure. There's no ifs, ands, or buts. It is absolutely broken. So now you have a lot of confidence. You're like, ah, okay. And that's why a lot of the market kind of FOMOs in. It's a big impulse move whenever that does happen. But you don't want to be buying that because there's no confidence there. There's confidence once this is clearly broken. Thoughts on Bitcoin dominance? Let's take a look. I think it's bottomed out. All right, so Bitcoin dominance is it's a funny bird, right? You can either say, look, it's going to go back to the lows and alts are going to just straight run until then. And so this would mean that the alts have, you know, another couple weeks to really run. So if you believe that it's time for the alts, then this is what you would look for, a return to the lows. If you're trading off of this rising wedge, the rising wedge has a target of, it's like either this touch right here or this touch right here. So if like some parties would say, no, that's this time to rotate back to Bitcoin. I'm done because this is low enough for me. That's all my risk tolerance is willing to wait. And I'm going to go. Some people say, no, what we actually need is a W bottom of some sort, like what happened in the last 2018 bear market. So that would put it down in here. Let's see if that matches up actually. That would be 24% to this target. Let's see. It's only 15. It's only a 15% pullback. So it's not exactly the same, but yeah, it's very interesting. I don't have a really strong read on this. I know that it's breaking and going to the downside, implying that the alts are outperforming Bitcoin. So if Bitcoin starts to run, or if Bitcoin falls, that's the other thing. Because during 2018, like all through this was alts selling off into Bitcoin. Okay, Bitcoin tops out at 20K. This is our distribution trade range. Bitcoin tops, and Bitcoin, the capital, there's a capital rotation from Bitcoin to the alts. So Bitcoin capital is rotated from Bitcoin itself into the alts, meaning Bitcoin starts to fall, alts start to pump. So this is capital rotating into the alts. So this was a really crazy drop. The market cap for Bitcoin dropped from 70% down to 35, literally cut in half. This is when you saw stuff like Litecoin went from $100 to $400. Ripple went from $1 to $3. Like this, that was during all this. This was like the mania, the like full on crazy mania part of it. Then the market drifted down kind of during the first pullback. But then this right here is what I want to show. I want to focus on. That right there was as the market settled down. All these 6K bounces where it's like 6 to 9, 6 to 8, 6 to 7, 6 to 6, 6. And then it finally cascaded to the downside and market dominance remained high. So no one was interested in alts until after Bitcoin bottomed. So you need the market to have a lot of confidence in where we are before you'll start seeing people rotate back into alts. So Bitcoin dominance does nothing but go up and then rotate, and you have a few of the alts we're playing. So this is when a lot of people's attention was focused on DeFi. It's kind of in here. And then boom, as soon as all the big bull signals said, hey, now's the time to buy, you can see there was a moment of very strong dominance with Bitcoin. It broke its prior all-time high, and basically from that point on, dominance has done nothing but drop, and the alts have outperformed Bitcoin. The majority of alts have outperformed. So that was just a little history if you never looked at it that way. It's kind of interesting. What is theoretical max total crypto market cap assuming peak adoption? Oh, dude, what is the gold market cap? It's gonna dwarf that even. 10 trillion, 100 trillion, 10x that for peak adoption. Bitcoin alone is gonna disrupt gold. I agree. And then the next whatever will only add to the market cap. Whether that's Ethereum or ADA, Sol, whatever. AXS. Promised my boy we'd check out AXS. Big impulse, pull back. Big impulse, pull back. Big impulse, big impulse, big impulse. For whatever reason, the market typically dies off after 3 shoves, whether it's 3 pushes to a high or just, you know, the 3 waves, the Elliott wave theory stuff or whatever. Anytime I see 3 macro legs, I tend to look for the exit. Where's the exit door? It's right there. I'm out. So it doesn't mean that like I'm a savant, doesn't mean I'm big brain. It just means a very low IQ way of looking at it is 3 shoves, get out. So on the lower time frame, let's take a look at it. Honestly, this looks like reaccumulation. Right? Remember we were looking at reaccumulation right here? Step 1, identify the channel. Step 2, see lots of attempts to break down. Lots of attempts to break down. Step 3, break up and out. Now we have not seen step 3, but if this is the real deal, you would see something like this, and then the moonshot. That would imply that this has an entire another leg in it. This 2x on this impulse. Could it go another, what was this, 50 bucks? 40 bucks? Could it go another 30 bucks? Could it go another 30 bucks from the highs to 100? That would put it a price target of 100. You look at Cody. You have a live short? Cody, okay. Check it out. All right, so it's a retest of the prior high. I think that's a reasonable place to short, assuming you're like in that single candle, like today's candle. And if it breaks, if you make a new high, like if it makes any new high above that, whatever the candle high is, I just get out. I wouldn't even play games with it. Stuff like this up only BS, it's the hardest thing in the world to trade. It's almost impossible to trade. Now, one thing in your favor for the short is that there is this point where the market is like broke up, came back, broke up again, broke down, retested. So the market is like telling you that this level is really important, and you're basically there. You're basically at it, and then you have this downtrend coupled to with that. So I think it's a reasonable place to take a short, but you just there's no telling. This kind of compression and then the explosion, like we've seen in Ethereum, like we saw with ADA, it's so hard to tell where the top is. It's not my style. Like I'm not very good at it, dude. I'm just telling you, up only is the worst market for me. Absolute worst. I can trade a trending market all day and do pretty half decent. But like even this felt like up only, right? And look at that compared to this. It's crazy. It's not even on the, it's like at a 20-degree angle. It's like 15-degree angle to the upside. Kudos if you caught it. There's that stuff I will never see coming. So BAT, let's check out BAT. I haven't looked at BAT in a while. Similar deal. See this top, this level? The market broke up, retested, broke up, came down, couldn't break above it a number of times. And now it's kind of back up there. I do the same thing. I mean, if you shorted the top, good for you. I don't think that's a bad move. But if it can get above this level, it's going to go to the prior highs. So get out of your short. Ooh, look at the Bitcoin pair. I'd watch this compression wedge. Ooh, okay. Hey, so no more alts for the moment. I want to go over a couple things in traditional markets that's very interesting. Speaking of compression wedges, because of whether you realize it or not, traditional markets do impact crypto. It does happen. So let's look at the VIX. We had a really nice attempted breakout, but it closed back inside this compression wedge. So if you're not familiar, the VIX is the volatility index. It's like the measurement of how scared people are. So all through history, there's been these compressions, big explosive move, compression, big explosive move, compression, big explosive move, compression, big explosive move. With these moves to the upside, all these explosive moves, the free market pulls back. So the NASDAQ, all that stuff, all the compression stuff, whenever you see this breaking to the upside or threatening to or whatever, just lessen your risk across the board because that's the real deal. Or you can play the risk by longing the UVXY. If you're on like Ameritrade or Robinhood or any of those, UVXY is the trade. Now, what I'm watching for, chat called this, they said if I long UVXY, I'm basically longing murder hornets because it's like all the fear and stuff. So what I would like to see with the current setup for the VIX and everything, before each explosive move, you see this like plunge protection team and then the retest and then it just full sends. The UVXY is very similar. So if we go back to the last impulse to the upside, there's this plunge protection. There's two tests of the lows, like a W bottom and then full send, right? I'd love to see the same thing. So Chad asked, didn't you long at 28? I did. I had a long back in for this impulse and I had a stop at my entry because I was playing like the big move, right? I didn't care about this little dinky move. So I got stopped out literally at break even. So whatever. But I respect the UVXY enough to know you do not ride the downtrend. Anytime, like I had this trend line and I knew that if this trend line breaks, it's likely to make fresh lows like this. So now you have a low, watch for something like that and take a fresh long on that. So that will be my next play if I get it. Would you say those big moves are after big margin calls? They could be. They could be. It's all correlated. Likely it has to do with scary things in the market. Like a new war crops up or threats of war cause supply chain issues, blah, blah, blah. And related, on a related note, maybe you noticed, but gold has had a rough few days. Silver is broken down from a multi-year consolidation triangle, broken down cleanly. And copper has confirmed a head and shoulders with the last couple days breakdown, head and shoulders. So the traditional markets, they don't look great. What are your thoughts on the traditional markets and crypto market correlations? I think when there's big pullbacks in traditional markets, I do believe that it does affect a crypto. So there would likely be a pullback in crypto as well. Think of it this way. I'm going to explain this concept. All right, conceptually, You are a fund manager for Wall Street. You're in charge of several billion dollars, maybe even trillions of dollars, BlackRock, whoever. And you have allocated a portion of your portfolio to certain assets that are risky. They're in the high risk, high reward category. Bitcoin is in that. If you're used to like 4 to 5% gains from your traditional markets and you see Bitcoin just YOLOing it year after year, that's high risk for you because you know you could lose it all if you play it wrong too. Like your whatever your entry is. So if you start seeing fear across the board, you're going to close that position. Because the way these big funds think of it is they have this like it's like a plant where they'll let the furthest parts of their growth, of their vines, of their branches, the leaves will fall off, whatever, they'll kill off certain branches to survive, to save the core, right? To save the entity as a whole. So these guys will cut their losses on their high risk stuff because it's okay. Or if they're in profit, say they're in profit right now, and it's like a high risk and profitable trade, doubly close it, get it out. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for, and nothing else. I'm not your hype man.